Hedge funds wins. Undeniably, private investors who face well-capitalized professional investors almost invariably lose. The financial media has extensively reported GameStop's spectacular voyage from around $77 on January 25 to $70 today, with a high of $483 per share in between. A social media-fueled trading frenzy pushed the stock price soaring in the most dramatic short squeeze I've ever seen. But that liquid seems to be gone now. I've been fascinated by the market's daily 100 to 200% swings over the last several days. Many have depicted this narrative as a merry band taking on Sherwood Forest's evil hedge firms. In a narrative like this, everyone enjoys pulling for the underdog, especially when it's against Wall Street's big cats. Hedge funds became too large in GameStop with more shares short than outstanding, and they were discovered. After all, hedge funds have been colluding to manipulate stock prices and short businesses for years. The retail investors drove the stock higher this time, forcing hedge funds to purchase back shares and cover their shorts, pushing the price even higher. Estime que les petits et moyens participants et satisfont Wall Street. That's fantastic copy, but the reality is always more subtle. Individual day traders have been promoting GameStop stock for some time, recognizing that some hedge funds had substantial stakes in the company. Many of the remarks notably targeted Melvin Capital, who lost a lot on their shorts. Although I doubt authorities can effectively punish anybody posting on message boards for market manipulation, Keith Gill, or Deep Thing Value on Reddit, was a prominent supporter of the stock, talking about it as early as June 2019. To motivate the community, he released photographs of his account balances over time. Due to his CFA charter and maybe not informing his former company of his own trading activities, Gill, who just left a significant business as a financial advisor, may face regulatory concerns. On Tuesday, Gill tweeted a snapshot of his account worth, revealing he lost $13 million only that day, unlike many of the Reddit commentators who were plainly adding to their holdings while GME was already in the hundreds of millions. Energy transition, industrial metals? Industrial metals? In total, it seems Gill gained up to $48 million in paper profits, then lost more than half of that in a week. Given the stock's recent performance, I hope he's sold the remainder of his holding for his sake and the sake of the hundreds of Redditors who vowed. If he's still in, I'm still in. After all, I'm willing to guess that more individual investors lost money on this transaction, buying into the euphoria on the way up, only to have it tumble back down below their entry point before they could quit. Ironically, most of the greatest winners seem to be hedge firms that gained from the enormous price increase. Moderate Capital, a distressed and event-driven hedge fund with about $2.7 billion in assets, allegedly earned $200 million on various Reddit-driven companies in January, giving the business a 9.8% return. Sinvest Management, a $2 billion AUM contrarian deep value hedge fund, allegedly made $700 on GameStop alone. It's difficult for investors to timing the markets, especially when up against well-funded, full-time experts with teams of people. It's one of the reasons why aggressive traders outperform buy and hold investors. Behavioral finance experts Terence Odeon and Brad Barber studied 65,000 families' trading behavior on a big brokerage platform and the influence of message boards on results. They discovered that those who traded the most aggressively, like GameStop last week, performed significantly worse than those who purchased and held more conservatively. In fact, their analysis found that the 20% most active traders underperformed the least active fifth of investors by 5.5% annually. Markets are like seas. Neither nice nor evil, they simply are. Investors, like swimmers, would be better to just master their cadence. Once you realize what you can and cannot do in the face of such unstoppable power, you may learn to just ride the waves instead of wasting yourself attempting to battle them and making no progress. so I won't even check the worth of my equity accounts. I'll simply put the same amount into my index fund as usual, and ride the waves. Don't just buy Bitcoin, earn it with blockfi. You can earn up to 3.5% when you spend with them.